This is just a recap on how I trade the forex market. All right, or how I make my analysis. I go to the daily time frame first of all to see what has actually been the major move, and then if you check here, you see that the major move has actually been a bearish move. That is, market has actually been flowing from the top to the bottom. So this gives me a hint on what the market is saying. You understand? So this is a focus that should be in my that should be taken into consideration, that the market actually be having what's called like a bearish move. So this is on the 1 hour time frame, and then I look at other liquidity points from previous months, previous week, and then we see that we have one. I'm coming, please let me fix it well. This is a phone. So we have one that is around this point. We had a liquidity point here where market took up liquidity before we had a bearish move downward. Then we had another bull movement. Then we got to this point market. So these are basic basic points that you should put in mind. You mark out those zones. Those zones helps you to trade effectively. So after marking out those zones, I go to my 4 hours time frame, and then I watch clearly to see how I can make a full analysis. So the first thing I do first of all is to check what the highs and the low, in order for me to pick my demand and my supply for that week. And so checking the highs and the low, I'm able to know where the market started from. I believe the market started from this week. So since the market started from here this week, so I'm able to mark it out. Yes, so with this I'm able to know what is my high. My high is around this region. Change the color so that it can be clear. Then my low will be around this region. Yeah, good. And then we had a major impact around here where we had change of character. Yeah, the market had a change of character, I believe so. Yes, and so with this we can be able to pick where we have our supply and our demand. Supply is above, so within this area, so you can actually pick it from here, and then you discover that everything falls back to it. Let me change the line. If you watch it clearly, you will see that market moved to this point. It was a rejection, got to this point, it was a rejection, got to this point, there was a rejection, got to this point, there was a rejection. And so every point where the market also move upward is also called a support or a demand zone. So we can actually mark it out. So I'm marking out my supply and demand zone. With this, I'm able to get a clear term. Now if you watch, even when the market had changed character or move from this zone to a different zone, it had to come and retest this demand zone before going down. So with this, I'm able to know exactly what to do in the next day. So I'm continuing, and then I zoom in to see what are the possibility of me trading, and I will see that I still have another previous demand zone here where market could come before. Now that's before there was a major. After a major bull run, we had a bearish move, and this was where the bearish move took up. So I'll be considering this liquidity point, this sell side, also why I trade. So the probability that will be in my mind or that will be in play here will be this. I will try to see how I can connect my lines appropriately to predict what could happen if anything will happen. Yes, the first thing first of all to do is to look at also this point. You see, there was a weak rejection here, and there was also more of like a liquidity, a buy side here. This was where, let me zoom it so that we can see it very clearly. If you watch it, you will see that the market actually, this was a buy side. Yeah, we had a buy side from here where market took up liquidity from here and then started going up. So we'll mark that side as also a key zone. Marking that side also a key zone. So I can call this a breakout. The market was supposed to get to this point, which now becomes the new support, and here new resistance. The market was supposed to get to this point and go up. So now we have a breakout or an extension. So I would be expecting as a forex trader, I'll be expecting that market should be able to come into this zone first, and then before I can maybe I should be expecting it to come either. Sorry, let me see. Remember, we trade based on probability, so I'm just giving an instance. So I'll be expecting this market, for me, I'll be expecting this market to come here around this zone and stop. And then the reason why I'm putting it around this zone is because we also have another liquidity point here. And look at where price consolidated, where there was a reversal, a reversal that tells you a trend will reverse. Sorry, I'm supposed to pick it from both the weak rejection. The weak rejections are very important too. So I have it around here. So I will be expecting this market. Let me delete this. I'll be expecting this market to have a pullback to this point, and then we'll have a rejection to this point. It's either the market will reject and come back here, one, or we'll have the market reject to this point and then buy back to this demand, the supply rather, buy back to this supply. Let me use another color. I think something different that can be all right. It's not showing. All right, let me use the red. So this will be the probability that will be in mind. You understand? So don't just have one probability, have two probabilities. If the market goes like this, then it should go like this. If the market doesn't go like this, then it should go like this. I hope this video helps. Thank you.